Welcome back. You're watching Hot Commodities. Volatility has been the word for crude prices too. We saw quite a few wild swings in the oil markets. The unrest and the Middle East supply issues saw both New York traded NYMEX crude and London traded Brent crack record highs. Then the situation in Europe also lent to the volatility in crude prices. The other notable commodity that suffered is copper. Slowdown fears dragging the metal lower and then a burst of optimism sending the metals higher the next day. The base metals pack largely has seen very volatile year. Similar picture in the agro space that has tracked the overall trends in the markets. So how will all of these commodities shape up in somewhat 2068? Naveen Mathur, Associate Director, Currencies and Commodities at Angel Commodities, Ashok Mittal, CEO, Commodities and Currencies, MK Comtrade, has all these answers. Thank you, gentlemen. We have been talking lots about gold in the previous segment. So just starting with that for this one as well. Naveen, going with you first, what's your range for gold for the coming 1 year, this Diwali to next Diwali?
Thank you very much, Manisha. We view gold as bullish for a 1 year perspective. If you ask me today, the prices are hovering around 26,500, 27,000 levels. Seeing the way the markets are, I think 28,000 levels, 28,500 levels can be seen by next Diwali if the situation is going to worsen here from the economic perspective. Otherwise, I think overall gold particularly would stabilize and consolidate at around 27,000 levels or so.
Consolidation is what Naveen is saying. What would you say, Ashok?
No, Manisha, I think the worst which we saw when the fall happened, about $50. So I think that's a good support level. So anything should buy on those levels, and a 10% downside should be a stop loss, which is I think should not hit. And on the higher side, we see somewhere about 30% upside from those levels. So we'll see somewhere close to maybe $2,000 or maybe a little higher from that. And in rupee terms, I think we should see 30,000, 31,000, because while we expect on the international market the prices to go up, I also expect rupees will continue to depreciate. So that benefit also will go to the investors. So I think it's quite bullish, and we expect good returns, maybe about 30% or so in the 1 year.
So no fear in gold really. Stability to gains is what we are expecting here. Let's start with metals now, and this year really hasn't been so well for the base metal prices. Most of the metals seem to be closing this year on the negative. Starting with copper really, Naveen, I mean, September quarter was really bad for copper. How do you see the prices going forward?
Manisha, mayhem happened September last week, and the crisis which is still there, ongoing crisis in the Eurozone, plus the US policymakers couldn't able to make it through the job bill plan. I think with the overall scenario and the Chinese little bit of the soft lending happening, we feel that the markets for the year ahead, if nothing very strong positive news coming up in the market, would be around these levels of 400 or so in Indian markets. Talking about LME, we feel that 8,000 plus levels or $8,500 levels would be one thing to watch out for.
Ashok, while we are talking about the US and Europe concerns for a very long time now, there are concerns about Chinese demand coming in the markets as well. And how would you read the various reports, one saying that copper could decline to $4,000 per ton on the lower side, and then there, of course, there is this UBS Goldman Sachs report talking about 10,000, 11,000 as well.
See, our idea is that support should be close to $6,000, $6,300 on LME, so not expecting too much of downside on that. And as well, higher side, I think we will not see, say, 10,000 or the earlier levels which we have seen. So we will be in the same range which we have seen. Last year, obviously, base metals pack, copper has not given returns except that little depreciation of rupee which you could see in Indian markets. So the range will be that only. Obviously, I think first half of the year will be where we will not see any kind of a demand coming in either from Europe or US or even China. So there is no trigger which will drive, say, base metal prices, especially copper. So unless either you see US housing going up or China starts buying, right, for the reserves or something. So they also don't want the copper prices to be higher. So I think that it will remain within the range. So what we are expecting is first half of next 1 year should be on the downside, where we expect the prices to correct further. And then maybe, if some demand, obviously when it falls, then China starts buying and some physical market demand start coming in. And then we see somewhere about $9,000, $9,200 on LME. So that should be the range, I think, for the next 1 year. So don't expect, although it's positive, but don't expect too high returns on base metal price.
Not record highs for sure.
Yeah.
Okay, just to, before we finish the metal story here, one major pick that you see in the metal space, starting with you, Ashok, again, one major metal that you would want to stay invested in for 2012.
See, from liquidity aspect, I always prefer copper, but I think for next 1 year, people should bet on nickel if they wish so, because I think this is a commodity which normally has been giving higher returns and where people will be little comfortable.
We feel aluminium would be the one thing to look out for. I said it last time also in Diwali show, nickel and aluminium, if you remember. I think aluminium did well on that account, and I think I'll still go with the aluminium rather than going in for another base metal bank.
Okay, to crude then, and this is one thing that almost all Indians keep an eye on, whether they're investing in equities or not, or even in commodities for that matter. And crude prices have seen very strong choppiness into this market. Naveen, coming to you on this one. While NYMEX is something that's holding around 85-90, Brent is really an issue with the Indians here, and the gap that Brent and NYMEX have seen in the recent months. How do you see the crude pack going in the 1 year?
Manisha, we Indian import Brent, and a basket constitutes more of the Brent variety of crude. We are not on the NYMEX side of the crude WTI contract. Now, talking about 104, 105 levels on the Brent and around $85, $89 on the WTI, I think this premium will going to continue up to this kind of a situation which we are seeing in the Middle East and which we have seen in North Africa, the MENA countries particularly, would continue to be erupting on. And until that particular region does not stabilize, one is this premium will going to continue.
Ashok, are you buying or selling? And that would really tell us whether we are going to have more petrol price hikes in the coming 1 year.
See, first I would like to speak on the spread, because I think the spread people have lived with that. People are surprised to see, say, platinum and gold spread where platinum has gone minus, right? So spread will continue. And in terms of prices, unless any kind of trigger happens for economic improvement, either Europe or US or globally, I think there is not much happening in terms of demand, right? And there's no terrorist kind of a thing where you have got a lot of concern and premium on that front. So I think there will be real downside pressure on the crude prices, both in fact. And if you see WTI, we expect the range may go to somewhere about 68, 70, like below 70 in fact. So that's the level where people should expect the prices to stabilize. And the higher side, somehow we're a little hesitant in terms of saying, okay, it'll go 100 plus. So the range is like 70 to 100 and more pressure on the downside.
Just before I let you go, one favorite pick that you have in sense of returns in agro commodities. Ashok, starting with you.
Somehow I'm feeling that China should give good return for next 1 year, because we have seen good amount of correction happening on this from 3,800 to say 3,000, sub 3,000. So 3,000 is a level which we are expecting to hold on to buy, and maybe downside will not be more than say 10%, whereas on the upside we expect 3,800 to 4,000 rupees range, so that gives you over 30% return. So 1:3 the risk reward ratio, 10% downside and 30% upside. So on agri side I feel China should be a good investment for about say 6 to 8 months time.
How about you, Naveen? Which agro commodity are you betting on?
I think I'm gung-ho on the vegetable oil complex. Indians would need oil, and I think with the emerging markets growing on, I think vegetable oil would be the one thing. Not targets, nothing at all, but then it's a gut feeling on the kind of demand we are seeing on the veg oil complex. I think I'll go for vegetable oils for the next year.
All right. Thank you so much, Naveen and Ashok, for joining us. So it's vegetable oil and chana in agro commodities, but both of our guests are betting on gold, copper, nickel, aluminum, crude, all sorts of commodities as well for the coming 1 year.